So Bitcoin is not crypto, and every time you see something that's scary about crypto, really you just got to keep in mind that everything that's bad for crypto is good for Bitcoin. I think that all these, the entire crypto crackdown is actually accelerating institutional adoption and retail adoption of Bitcoin.
MicroStrategy's CEO, Michael Saylor, recently discussed the superior value retention qualities of Bitcoin, emphasizing its position as the ultimate store of value. Recognized as a prominent advocate for Bitcoin, Saylor also expressed his views on the widespread adoption of digital assets and expressed his belief that the term cryptocurrency inadequately describes Bitcoin. According to him, Bitcoin stands apart from the broader crypto space, benefiting from factors that are detrimental to other cryptocurrencies. According to Saylor, Bitcoin represents a digital equivalent of gold and serves as an excellent store of value in today's digital age. As per Michael Saylor's perspective, the term cryptocurrency is considered unfavorable since it does not legally qualify as a currency. He suggests that using the term crypto money may be more intellectually accurate. However, a challenge arises when people commonly associate money with currency, leading to similar cognitive misconceptions. Therefore, Saylor proposes that referring to it as crypto property would be a more suitable and accurate designation. Remember to subscribe to our channel and click on the bell icon to get notified when we post new, intriguing, and informative videos.
There's a crypto crackdown going on right now, and that crackdown is on crypto exchanges, crypto asset securities. That is, there's 20,000 crypto tokens that are substantially all securities. And then on cryptocurrencies like the stable coins. That crypto crackdown is really good for Bitcoin. And so the way it's impacting Bitcoin is as the exchanges delist those crypto securities and as the public loses confidence in crypto exchanges, cryptocurrencies, and crypto securities, all that capital is flowing into Bitcoin. Because Bitcoin is the ethically sound, technically sound, economically sound crypto asset. It's the king of all the crypto assets. And so ethically sound, meaning in this case, it is an asset without an issuer. It is a commodity. So you can't serve as global money for the world unless you're a commodity. If you're a security, then that means you're an asset with an issuer controlled by a small group of people. That's an attack surface, plus that's regulated as a security by the SEC and every other security organization. So as the challenge for Bitcoin has been rising through the confusion of 20,000 other cryptocurrencies and the fact that hundreds of billions of dollars have been drained out of the ecosystem into cryptocurrencies like the stable coins. As the stable coins actually lose the confidence of the public, people are going to sell the stable coin, they're going to buy Bitcoin, and then all of that capital that's sitting on crypto exchanges and sitting in the cryptocurrency networks like Tether and Circle and the like, it's all going to flow back into BTC, because Bitcoin is the reserve asset of the crypto ecosystem.
According to Michael Saylor, there is an anticipated surge in Bitcoin adoption, driven by diminishing trust in the US dollar and the banking system. He foresees a stampede of intelligent investors flocking to Bitcoin as a result of banking and currency instabilities. Michael Saylor highlights the macroeconomic apprehensions surrounding inflation, leading to a decline in trust towards fiat currencies. Consequently, individuals begin to recognize that assets tied to cash flow are essentially derivatives of currency. In contrast, Bitcoin's value is not based on cash flows, making it distinct from traditional assets.
The reason you would want Bitcoin if you lived anywhere outside the US is because your currency is going to zero and the banking system is not trustworthy, and the odds that it's going to default on you are sort of 1 in 10. In Russia, the entire banking system failed in, I guess, 98 or so. And about every 20 years in a lot of countries, the entire banking system collapses. When the banking system collapses, the playbook is your local currency is devalued, then your foreign currency reserves, like the dollars or the euros, get converted to local currency, and then they get devalued and frozen. And so you really you really can't have a treasury. So you end up basically starting from scratch every single year. In the US, we haven't seen large corporations lose their deposits in dollars or in treasuries in recent memory. But what they are losing is anywhere from 5 to 10% of their treasury value every year for the past 100 years. So that's the reason to use Bitcoin as a treasury reserve asset. It's theoretically going to appreciate anywhere from 20 to 40% a year ad infinitum. When it reaches saturation, it appreciates 5, 10% a year, and you can count on it appreciating versus fiat at something in the range of 7 to 10% a year forever, because fiat currencies will always inflate at 7 to 10% a year forever.
During an earnings call, Michael Saylor expressed his belief that Bitcoin is the sole genuine safe haven for institutional investors. He emphasized that Bitcoin stands as the universally recognized digital commodity, making it the ultimate sanctuary for investors seeking stability in this regard. According to Saylor, if you're an investor, Bitcoin is the secure haven you should consider. Michael Saylor's passionate endorsement of Bitcoin has had a significant impact on numerous investors, inspiring them to consider the digital asset. However, any setback or negative development in the Bitcoin market may lead to a decline in confidence among investors.
Bitcoin is an asset. It is a digital asset. And so we've crossed the chasm. We had deniers. Bitcoin is a Ponzi scheme. It is tulips. And then we had skeptics, a whole set of skeptics. Bitcoin is too good to be true, therefore the government will ban it. There's still a few skeptics floating around that say that. Sometimes the Warren Buffetts of the world, sometimes Ray Dalio says it, sometimes he doesn't say it, but you have some skeptics. But for the most part, the mainstream consensus has moved into the camp of Bitcoin is an asset, uncorrelated asset. Not sure whether it's correlated or uncorrelated or what kind of asset it is, but it's an asset. They moved into camp 3. I think the outlook is particularly bright because now we're moving into a 4th category of investors, the technocrats. And the technocrats would say this is the world's first and greatest digital monetary network. It is a way that you can move $1 billion from New York to Tokyo in a nation-state resistant fashion. If you had to ship $1 billion of gold from New York to Tokyo, or from Tokyo, across China, to Kazakhstan, and you wanted to do that without getting interdicted by a nation state, it would be a worrisome thing. You'd need a battleship, or you would need, how do you fly over foreign airspace with billions of dollars of gold and not worry that the plane will crash, someone will shoot it down? Whereas if you wanted to move $1 billion of Bitcoin anywhere in the world, you could do it in a few minutes, and you could be reasonably sure that a nation state can't stop it.
If global transactions involving dollars and Bitcoin could be executed swiftly through crypto channels, the entire world would gravitate towards these two currencies, as stated by Saylor. He further highlighted 2 significant factors driving the widespread acceptance of Bitcoin. However, the question remains, what if Saylor's predictions for Bitcoin's future prove to be wrong? To wrap up our discussion today, we invite you to leave your thoughts in the comments section. If you found this content useful, please show your support by giving it a thumbs up and subscribing to our channel for the latest news and videos. Thanks for joining us.